Microsoft just announced their fiscal year 2022 earnings, and the media is actually saying that it's a little bit disappointing. I actually don't think so. I think these earnings are really good, and it's providing a greater reason for me to start buying shares into Microsoft. So that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel. And let's dive right into this one. So you can see here, the Wall Street Journal reported that Microsoft's earnings were dented by a cloud slowdown and a slowdown in video game sales. And so that resulted with the lowest earnings growth in 2 years. And that's all fine, but effectively what you're saying is that sometimes business slows. Duh, we all know that. And so that's why when we model out these companies, we model them conservatively, and then we also take a haircut, 50% price to intrinsic value, to address for these types of things. So what exactly is happening? Well, you can see that a stronger US dollar is partially to blame for the weaker results, as well as a slowdown in the cloud business and declining video game sales. So what does that US dollar mean? Well, and so I put it here on the top right, just for anyone who's a little bit newer to investing. So a stronger US dollar means Microsoft products are more expensive to international customers who could potentially pull back on their spending. Alternatively, it weakens the value of generated revenues denominated in foreign currency. So that's how a stronger US dollar impacts results. But note that there is a bit of a hedge here, and it's a natural hedge, as they also pay wages in international currency. So just keep that in mind here. And of course, the currencies go up and down. So you can absolutely see a reversal here, and a weaker US dollar could cause results to be much better in subsequent quarters. So we'll see how this plays out. Now, on the bottom here, you can see that Microsoft is starting to experience the effects of the end of the pandemic era. And so you're seeing PC shipments suffering their steepest decline in years. And so for those of you that are investors in Corsair, this is a read-through, because Corsair's main business is still shipping computers, and they already signaled a slowdown. So now Microsoft is also seeing a slowdown. So what does that mean to Corsair's quarterly results as they come out? I think that there's going to be a huge slowdown in that business. But if you're long-term focused on Corsair, could this potentially be a buying opportunity? I will actually dive into that in a subsequent video. So if you're not subscribed, subscribe right now. And note that the video games segment is slowing, but Microsoft is still bullish on the sector. Recall that they're buying Activision. And note that, in full disclosure, although I don't own Microsoft right now, I did invest in this risk arbitrage opportunity, and I still expect it to close before the end of fiscal year 2023. And I'm not the only one that believes that. Management also believes it. You can see here that they actually still believe that their Activision acquisition is expected to close by the end of the next fiscal year, so fiscal year 2023, which is what they're now into. But note that that could be stalled by US regulators, but I just don't think that they have anything to hang their head on in stopping this transaction. I think it goes through. Now, I will link to that video where I walk through that whole situation of the regulatory issues and why it's causing such a large discount to the purchase price, but I'll link to that at the end of this video. Now, with their segment guidance, they're providing guidance into the next quarter. So you can see in productivity and business processes, they expect revenue to grow between 12 and 14%, and it's largely going to be driven by growth of their Office 365 product. And I have them growing this segment at approximately 12.5%, so it's nice to see that we're thinking along the same lines here. Now, they have Intelligent Cloud growing between 25 and 27%. I have this growing at the low end of approximately 25% with a drop-off by fiscal year 2028, and I'll show you that when I show you the model. Now, with their computer business, they actually expect to see a decline in high single digits, and on their Surface side, they expect to see a decline in the low single digits. Now, I'm personally predicting that we see a pickup near the end of the year, so I'm still looking at a 5% year-over-year growth in 2023. So we'll see how it lands. If you're modeling this out, you're probably better off to predict that decline for 2023, but I'm remaining a little bit bullish here. At the end of the day, it's not a huge variance, but I could miss on this. But at the end of the day, it doesn't matter. I'm predicting 5% out over the course of the next 10 years. And I think on average, they hit that 5% segment growth rate. So what do I mean by my model? Well, you can see right here. Overall, I expect revenue to grow at 15%, which is down from 18% in fiscal year 2022. I expect profitability margins to remain relatively stable, but this could be put under pressure in the personal computing segment. So that's what I was talking about. So you can see that more personal computing line. I'm growing it at 5%. Microsoft is telling you that that's going to be in the negatives, but notice I'm pushing it 5% throughout into 2032. So on average, I think this segment grows at 5%. Intelligent cloud, notice that I'm growing that at 25%, and then I drop it in 2028 to 15%. And productivity, I'm growing at 12% or 12.5%, but then I drop that right down to 5% subsequent to 2028. So there's a lot of conservatism built in my model for forecasting out revenue for Microsoft, which might be the reason why my valuation for Microsoft could potentially be lower than what other people are valuing Microsoft at. So let me know what you think these segments should look like post 2028, and let me know in the comments, and what am I missing here? And so where does my valuation fall? And so you can see that my valuation using a terminal multiple of 22.5 times earnings, which is actually low itself, I'm getting a valuation of approximately $350 per share. The current share price is $250 per share. So the share price as a percentage of their valuation is approximately 71%. So I might actually start investigating some cash secured puts for Microsoft to see if I can get a net purchase price, which is 50% of its intrinsic value, but also get a yield, which is higher than maybe 20%. But I don't think that exists. I have been looking for a while now. I just don't think that there's that much downward pressure on this stock. However, if the market starts declining rapidly, there could be enough downward pressure on the stock, which swells that premium for the cash secured puts. But like I always say, I'm patient. There's a lot of you guys that don't like how sort of conservative I am with buying companies. And like I did say last year, I did start selling a lot of my stocks, and I did go into around 70 or 80% of cash. That cash has been dwindling a little bit, but still my largest position is cash at the moment. But I do hope to deploy more of that as I see sort of like obvious opportunities present themselves. Microsoft is not obvious yet to me. I want it to come down a little bit more, but I will start sort of nipping at it, I do believe it, especially if the cash secured puts get a little bit juicier. So we'll see how this plays out. Now, if you want access to the model, you can get access to that at the lower tier of the Patreon. And if you want to join us for a live epic call where I save my absolute best research for, you can join us at that upper tier of the Patreon. And if you're interested in that Activision opportunity, this is something that Warren Buffett also invested in. I actually broke down that whole situation, which you can get to right here.